just wanted to get an expert opinion on what the projections are sort of looking like for this year and what you are kind of expecting based off the information you have.
Yeah, I think it's a great question, and it's something that everybody is thinking about. I mean, the last couple of years in mortgages and real estate have been really unprecedented, right? And so everybody's looking to the next year to see if it's going to be, continue to roll. And what I know from our side, the mortgage side of things is that really it's, interest rates are bound to rise. We've had, really 18 months of historically low interest rates, and because of that, there has to be a rise, and really the big thing that's going on right now is inflation is combating those low interest rates, and so the arch enemy of low interest rates is going to be inflation, and so the Fed's goal this year is to kind of combat that higher inflation number. We're in the mid sixes right now. A lot of people are saying that it may go up to 7.5%. We're really not sure how high it's going to go, but the only way to combat that is for the Feds to raise their rates, and hopefully it comes to a little bit of a flat line, so that there's a sweet spot there where the Feds are raising their rates, inflation calms down a little bit, and I think if we find that sweet spot, that towards the end of the year, maybe the last quarter, rates will start to decline a little bit again. But I think, for the next 8 or 9 months, we're probably in a situation or an environment where rates are just going to continue to rise.
Yeah. I mean, I've heard from quite a few people that they don't expect them to really go too much above 4.
Right.
Of course, that could change.
Yeah. And you have to take what I say with a grain of salt, right? Because we're looking at charts every day.
Yeah.
And when we see minor movements, it's big to us, right? We have to find something to get excited about. So really, I don't see rates going over 4%. At the beginning of the COVID pandemic, early, was it March of 2020? Is that what it was? Yeah.
Right at March.
Rates had gone down and they shot up to almost over 5%. I don't think that we're going to see that. I think we're going to see a gradual increase over the next 8 to 9 months. I think we'll see a flat line. And as inflation is tempered a little bit, we'll start to see those rates go back down.
Yeah.
So, yeah.
That's definitely going to be probably one of the struggles here. Is just the home values are so high. A lot of the homes will be above that max, and so we have to get creative with that.
In St. George, I've heard numbers around 30% is what values had increased last year, and this year it's expected to be in the teens again. And so I wish that they could do a mid-year increase in that loan limit. I don't know if it's going to happen. In 2021 they increased it in September, and we were able to implement that right away. But who knows what it's going to look like this year? So
we'll see. The 30% increase, that was on single-family homes, just like resale.
Yeah.
Guess what the new construction increased from? It was around 747,000 last year, 2020. That was the average. This year is 1.1 million, and that's 55% increase.
That is incredible.
So the new constructions are even more tough, really, to unless you have a huge down payment, or something like that.
I think it just comes to supply and demand, and there's so many people that are coming in here, and whether they're selling a home in a different state or what have you, and they're moving here and they have a little bit more money than maybe they would have had a couple of years ago, and so those larger homes in St. George, it's almost weird to see how many homes are being sold over $1 million. I don't think anybody would have ever seen this. So,
no.
Yeah.
At least not out in just the general areas.
Yes. Yeah.
That's a good point too, though, is all these people that are selling houses, they're also getting those gains.
They are.
So it might not slow us down, or it might not affect us too much.
It almost cancels each other out.
Yeah.
So, and here's the thing, like you had mentioned, in previous conversations too, inventory is down so much, and so as soon as inventory hits the market, whether it's new builds being completed, spec homes hitting the market, I think it will give your buyers a lot more opportunities.
Stability.
Yeah, a lot more stability and opportunities just to find homes.
And the interest rates are still good.
Yes.
The affordability, even with the prices going up, with a good interest rate, you're still looking at a low payment that you can afford.
Right.
So.
Yeah. And I think it's important that we've been so spoiled over the last year and a half, right, with interest rates in the 2s that, once it hits the 3s, everybody is nervous about where the market's going. But still, historically, it's an extremely low interest rate. And so, you know, yeah, maybe we're not seeing the 2s right now, but if we're, you know, low to mid 3s still, it's going to,
Yeah.
your monthly payment's still going to be, you know, extremely reasonable.